Hello guys, in this video I'm going to talk about the other strategy that I use on volatility and jump indices. I also use this on boom and crash. If you're in my Telegram channel, you might have come across this setup a lot. It's the dominating setup in the Telegram channel. I use it a lot. So let me quickly explain it to you, then we'll look at some trades that we have taken and how I approach the market, how you can also learn from it and apply it on your own. So this is for a bearish market. This is for a bullish market. Opposite of bearish is bullish. So what you look out for on bearish market, you look out for the opposite on bullish market. So what we look for is, first of all, we look for break of structure. We need to get a break of structure. And after break of structure, we look for inducement. Right after inducement, we look out for the points of interest left in the market, which is the order blocks left. Once you get your order blocks, you look for the first and the last. Take note of this. The first order block right after the inducement and the last order block. So this is the first one right after the inducement and this is the last one. Now, after that, you look for confirmation once market enters any of them, whether the first or the second. If you watched the previous video, I talked about the confirmation candle. It's the same candlestick pattern. If you have not watched it, do well to watch it and understand the concept behind the confirmation candle. So you look for your confirmation candle inside the points of interest. Once it gives you that, you take your trade right away. Then you put your stop loss above the POI. If market does not give you the confirmation over here and enters the last order block, you wait for the same confirmation. If it does not give you, you allow it to go wherever it wants to go. So this is the concept behind the strategy. Also, one thing you need to pay attention to is the momentum in the market when it is approaching your point of interest. So this movement right here, if it goes sharp, then it's very dangerous. But if you see the market moving slowly towards your point of interest, slowly, building liquidity down here, then there is high probability of it reversing. But if the market approaches the point of interest with a sharp movement, then you need to be very careful over there. I will show you examples on the charts. And this is in the bullish direction too. Your break of structure, inducement, first point of interest after inducement, or last point of interest after inducement. So if market gives you the confirmation inside the first one, you take it. If it gives you in the last one, you take it. You just allow the market to do whatever it wants. Also, make sure you pay attention to the momentum. The slower the momentum, the higher the probability. That's how it is. I will show you examples in the chat. So you need to look out for markets approaching your point of interest slowly like this. Your point of interest should be preceded with an imbalance to make it a strong point of interest. This is the strategy I use, and these are the rules. If you want to follow it, then you need to follow my rules. So the rules are break of structure, inducement, first point of interest or last point of interest. Point of interest must be preceded with imbalance. When I say point of interest, it makes sense because if I just say order block, everyone has his way of marking his order block. So you might mistake my order block for somebody's order block, or you might mistake someone's order block for my own, and you might make mistake in your entries as well. So if I say point of interest, that's when I can explain to you, this is my point of interest. So the point of interest must be preceded with imbalance to make it a strong point of interest. So let's quickly go to the chart and let me explain some setups to you. So let's quickly go through some of the most recent setups that we took and I'll use them to explain to you. This is volatility. I think I took it on the 1 hour. And one thing too, with this particular strategy, the time frame doesn't really matter, but the time frames that I normally use a lot is M15, M30, and the 1 hour time frame. These are the three time frames that I use. I am mostly active on the M15 and the M30, and sometimes I check the 1 hour as well. So if you come to this setup, we had this as our break of structure over here. We had this break of structure and we had this inducement over here. After the break of structure, we wait for inducement. So we had inducement over here. Now, right after inducement, we mark our points of interest. So this is our first order block over here, this bearish candle. It swept its in the previous candle low, and yes, this is our first order block. and it is preceded with imbalance. You can see over here that there's imbalance leading it and this sharp movement over here. So market is likely to come and fill this sharp movement and maybe mitigate our point of interest and reverse. And this is our last point of interest. This would have been our order block here, but it got mitigated by this. This one also got mitigated by this one. And this one also got mitigated by this one. So this is the candle that has the imbalance preceding it. So we'll use this one, the one that just comes right after the imbalance. So this is the imbalance. This is the candle that precedes it. So this is our last point of interest. So we expect market to give us confirmation inside this point of interest or break it and come and give us confirmation inside here. And if it does not give us the confirmation inside any of these, we just allow it. Whether it goes up or it goes down, we do not care, but we need to stick to our rules. So we get our confirmation, we take. We don't get, we allow it to go. Now look at something over here. As I said, if you have not watched the previous video, go and watch it and understand the concept behind the confirmation candle. So market entered over here. It gave us our confirmation candle, which is this candle. The concept behind it, if you don't understand, you can go and watch the previous video. So this is our confirmation candle, and we take our buy right after the confirmation candle with our stop loss. You can put your stop loss just below the confirmation candle, or you can put it below the point of interest. Normally, I like to put my stop loss below the point of interest because market can be some way. It can come and sweep this confirmation candle and give another one again. And if you just put your stop loss over here, you might be hit and market will still reverse. So the target is the high that the market's left over at the top there. So you put your take profits right over here. But as I said, it's not all the time that I wait for the full take profit. You need to have realistic targets. So it means sometimes just 1:5, like mostly 1:5, and I'm out of the market, or I close majority of my positions and I allow the rest to run. Whatever happens, it happens. But mostly 1:5, unless I have another confirmation backing it. And I also made mention of the momentum towards the point of interest. Look at this over here. Unlike how the market just got up straight over here like this. Now look at how the market was coming down. Up, down, up, down. So you can see that the momentum here was a bit slower. It tells you that the market is likely to reverse, and it also built some trendline liquidity over here, telling you that the market is likely to go up and grab that liquidity. So these are all extra additional confirmations or confluences that will build your confidence to take the trade. I also had another, let's check. This was Volatility 10. This trade, I posted this trade inside the Telegram channel. This was it. I think I took it on the, was it M30 or no, it was H1 rather, yeah. So over here you can see this was our inducement at the top. This was our break of structure. We had our change of character over here. So this was a change of character and not a break of structure. We shifted from bearish to bullish, and after the change of character, we had our inducement over here. Now after inducement, we look out for our point of interest. So this is our first point of interest over here. And when market entered, it did not give us any confirmation. It broke that point of interest, so we waited for it to enter our last point of interest, which was down over here. This would have been our last point of interest, but it got mitigated by this candle, and the imbalance was just in front of this candle, so we use that as our order block, our point of interest. Now when market entered, we look for our confirmation candle. If you look here, you can see that this candle right over here, the concept behind our confirmation candlestick, this candle swept the low of the previous candle and closed within the range. You can see that this close over here was within the range of this candle. Don't mind this bearish candle. That bearish candle over here was within this bullish candle, so it's indecisive. Like, it's not a candle that we use to make a decision. So you don't make any decision based on this candle. This is the active candle. So we had our confirmation candle here, and we take our trade right after the confirmation with our stop loss below the point of interest and our take profits at the high. And after that, let's switch to M15 and see something. Let me just delete it so that it will look clean. So you have seen the H1 entry. Let me delete it and show you how we got the other entry on the M15. Now look at something on the M15. If you check the M15, this was our change of character over here. We had this change of character. After change of character, we had this inducement. After the inducement, we had only 1 point of interest left behind. So we had only 1 point of interest left behind, which is this candle over here. So this was our point of interest left behind. And when markets entered it, since we had the other confirmation on the H1, everything was, and one thing is the high time frames are always stronger than the lower time frames. So we had our buy on the high time frame and our stop loss below this POI over here. And now on M15 too, we are having this point of interest. So I didn't even wait for confirmation. I just quickly set my buy limit over here with my stop loss below the same stop loss with the high time frame. So we use this same strategy on the H1, and we used it to catch another re-entry or additional entry on the M15 as well. This setup, I shared it in the Telegram channel. On Volatility 75, this was a break of structure over here. We had this break of structure. We had this inducement. After the inducement, normally break of structure, I mark it with an arrow, and our inducement, I mark it with broken lines. That's what I used to mark our inducement. Now we had this point of interest over here. This was our first point of interest, which market did not give us any confirmation. So we waited for it to enter our last point of interest, which was over here. This was our last point of interest. Now pay attention to momentum as well. As I said, look at how the market flew up over here. But when it was approaching our point of interest, see how it was going up and down, up and down, up and down, up and down. Telling you that the market's momentum towards the POI is weak, and it has also built trendline liquidity at the top here. And market is likely to go up and grab the liquidity above this. Now, when market enters, we look out for our confirmation pattern, as I said. If you don't know about the confirmation pattern, make sure you watch the previous video. I explained it over there. So this is the first candle that entered, but it wasn't our confirmation candle. Markets went up a bit and came back inside. And look at this candle over here. It swept the low of the previous candle. This is the previous candle. These two bearish candles over here, they are all within this bearish candle over here. So they are indecisive. You can't make a decision with those candlesticks. They are not active. So if you make decisions with them, you are going to lose. They are both within this big candle. And this is our confirmation candle. So right after our confirmation candle, you take your buy directly. All these setups, I shared them in the Telegram channel. You can keep your stop loss, as I said, sometimes below here. But because of what I've seen with the reef, I'd like to put my stop loss down there for my own safety. And as I said, we target the high over here. But the market does not belong to your father. It is not your own property. Don't be waiting all the time for the market to go to the full take profit, the market structure take profit. Have a realistic target. 1:5, 1:4, they are realistic. The market is likely to hit those targets. You can't be targeting every day 1:10, no, that's not realistic. So you get your 1:5 or your 1:8, 1:7, you are out of the market. Some even target pips, 10 pips, 20 pips, 30 pips, they are out of the market. So this was it. Market did not hit full take profit and it's returned. But then that was a very nice buy. If you're in the Telegram channel, definitely you will be seeing a lot of my setups, so you can be learning from them. You can be taking notes as I post those setups in the Telegram channel. So if you look over here, this was a break of structure. This arrow here was our break of structure. This broken lines over here is our inducement, and we had this as our point of interest. which is our order block. It was preceded by imbalance with this sharp movement over here. And the market's momentum towards the point of interest was very slow. You can see that over here. A very slow momentum, telling you that market is likely to reverse. And it's also built some trendline liquidity over here. We had this trendline liquidity over here, telling you that market is likely to come down. Let me delete the entry. When markets entered, this was our confirmation candle over here. You already know what I mean when I say the confirmation candle. This was our confirmation candle. It swept the high of the previous candle, closed within the range. I was not around, but fortunately I came back to meet the market still around this area. So I took the sell from here. But this was where you should have taken your trade, right over here, with your stop loss above the point of interest. Sometimes you can put your stop loss just above the confirmation candle. And as I said, you see over here, the market went up, swept the confirmation candle again, and reversed. So if you had your stop loss over here, the market will take you out and still reverse. So I like to put my stop loss above the point of interest, and you target the low as usual. Once again, this trade was also taken in the Telegram channel. I posted it over there. Jump 100 this morning. This was our inducement break of structure. After break of structure, we had inducements over here, these broken lines over here, and we had this point of interest preceded with some small imbalance over here. But markets did not give me the confirmation that I wanted. It just broke through my POI. So no entry over here. I'm good to go. No loss. As I said, make sure you follow the rules. If you want to follow the strategy, then be ready to follow the rules. Over here, this is also jump 50. I'm waiting for confirmation. The market has entered our first POI. We had the break of structure. Let me explain this quickly. We had this break of structure over here, and we have this inducement. This is our first point of interest. This is our last point of interest. Okay, so market is currently trading around the first point of interest. It has not given us correct confirmation candle yet, but this momentum over here too was not that slow. I see this to be too sharp, but the confirmation over here will tell. We have not gotten the confirmation yet, so I'm still hoping and waiting to see what will happen. If market does not give me the confirmation here, I'll wait for it. Probably the momentum will slow down and enter the last POI over here. Then we will take our trade directly. So these are some few setups that we took recently on Jump, Volatility, and Boom and Crash. This is the Telegram channel over here. If you are not inside here, make sure you search Arbitrate Synthetics Arena on Telegram, or you can check the description of this video. I'll post the link over there and you can join. This was the Volatility 10 trade. We first took the buy on the H1, and this was the re-entry, the additional entry on the M15. This was Boom 300. We do a lot of crazy things over here. This was when we took the Volatility 10 trade on the H1 and when it started moving. Crash 600 moving. This was the Volatility 75 trade that I was explaining to you earlier. This was when we took it on the H1 and this was when it started moving. So we do a lot of crazy things over here. Make sure you search and join, or click on the link and join us.